3, 2, 1, 0, and liftoff. Liftoff. Americans return to space as Discovery clears the tower.
Alright, welcome back to TTMTrades. Today we're going to be talking about ticker MYO, AKER, and ATOS, and then we're going to touch on ticker CHFS. We're going to try to make this real quick. Please subscribe to the YouTube channel, stay up to date, and subscribe to the Stock Twits if you have a Stock Twits account. Alright, so let's just jump right into this. Oh nice, I already have MYO pulled up. Alright, so just a quick synopsis on MYO. Alright, so the old resistance was 445, as you can see here. 445, tried to come through, failed, ran back up, topped out at 446, couldn't close above it, failed. Finally had to break out here on decent volume. Ran up to 563. Remember the golden rule, old resistance should become new support, and old support should become a new resistance. What do I mean by that? As you can see, this trend line here, which was a support, tried to hold that support, broke through, has now come back up, resistance, came back up into that trend line, and it got smacked back down. But at the same time, as we broke through that resistance of 445, we came back down. Even though we dipped below that $4.02, we closed above it. Now, just that alone, as we had this slight pullback, one thing to pay attention to is the volume. So as sellers are taking profits, pretty much the volume would be real low. So as you can see, it was below average volume. We came down, had a gap down, came all the way down to $4.02. Buyers immediately came in, accumulated these shares, and closed it above 445. Now, if I'm someone standing on the sideline and I missed this immediate run with the break above the prior resistance, if I see the price action close above the resistance once we come back down and retest it, then for me that's a very bullish sign, and that lets me know there's a lot of interest in this stock. Okay, and that's what happened. So as you can see, the next day immediately made a higher low than before, and then created a higher high and closed at 474. Again, old support is now new resistance. As you can see here, this trend line again, support, came through, broke through it, came down. Now we're back in this channel, came back through, closed under that support. So now we have a couple of areas of resistance we need to psychologically work through. Immediately we need to break above this $5, which should not be hard because interest is coming in, and then work our way back up into this 563 range where it topped that out. Now this 563 range also correlates with your 38% retracement on the Fibonacci retracement. So have this nice breakout above 563, and then we will work our way back into these channels of price targets of 673, 784. Do I think we're going to work our way back to this $11.40? Yes, I do. All right, but first we need to work our way through these immediate price targets. Now I think we will have this run from 474 up to the 784, $8 range, which will put us right back in this channel. I think once we get in this price target area, then you have to keep in mind those who bought back in down in this area, and then right at the breakout, because this is normally where people buy in, they wait for it to break out on high volume, and then buyers will jump in. So people who are accumulating in this general area of 445 to give or take $5, when they begin to push up in this area of 784 to $9, give or take, there's going to be some profit taken. Okay, and you just have to think common sense. If I get in this $4 range to $4.50 range, and I double my money at $8 to $9, that's 100% return. So knowing that that's 100% return, people are going to take profit. So you should already expect, once you push up into this $8 range, $9 range, you're going to have another slight pullback. Well, guess where that pullback will be? That pullback will more than likely be where this trend line is currently still trending. It will fall back onto this original trend line, which is still trending up, and fall on that for support, and then you should get a nice bounce and move back up into this 1140 range. So right now I think the trend is very strong. We've already worked our way up into trying to fill this gap, so we're going to continue to head back up, and like I said, we're going to work our way into this $8 to $9 range easily from 474. There will be some profit taken because those people will get easily 80 to 100% return on their money and start taking profit, and then that will have a nice slight pullback into a nice support area, which I believe will be this top right here at 673, 685, which where this trend line should be at by the time you start your run up and have the pullback. But we are working our way back up to this $11 range, and the trend is healthy, and the RSI still in the bullish zone. All right, moving on, because I could talk about MYO all day. Next, we'll be talking about ticker AKER. I called this one out back on January 7th. All right, AKER on a 2-hour time scale. All right, let's delete some of these old trends. That trend is no longer happening. We already had the breakout here, and this trend is now probably going to become resistance, which, yes, is right at the 30, and that's at the 30. So we'll bring over our past support area, which I highly doubt will drop back down to this area. So we'll push it up now to the new support of 25 cents. All right, now as you can see on a 2-hour time scale, this trend has been very healthy and holding just fine. As you can see, support, 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 nice breakout, came back down, support, and then finally broke through this trend and trended sideways, with 23 being a nice base support area. Finally, the volume, as you can see down here on accumulation, is high. On days of selling is low. Then you have 2 days of accumulation, which creates a higher low and a higher high. So now we're beginning to trend upwards. Okay, first area that we want to break through is this resistance of 30 cents, which also correlates with the trend and where it's at right now, 30 cents. So breaking through 30 cents will be very, very bullish. That is what we want to do, is break through 30 cents. Now, once we break through that 30 cents, let's go back out to the daily. Looking at the daily areas we want to work our way into. Again, looking at the 50-period moving average, this has traditionally been a moving average that has smacked the price down. As you can see, came up here, failed, came up here, failed, had a breakthrough but could not close and hold above it, came back below, failed, couldn't even reach the 50-period moving average, failed, and then gap down. So now the 50-period moving average is right at 31 cents, which correlates to our 2-hour chart of 30 cents. So this is a major area of resistance, 30 to 31 cents. If we have a breakout above 30 to 31 cents on good, decent volume, then we work our way up to our third Bollinger Band, third standard deviation top Bollinger Band at 36 cents. Well, guess what that 36 cents correlates to? 36 cents correlates to what? Correlates to filling the gap right here, as you can see. All right, once we fill that gap at 36 cents, what do I think will happen? I think we will have a slight pullback on the 31 cents, because remember, old resistance will become new support. So once we fill the gap at 36 cents, remember, there are a lot of traders who entered back in this area late December, right? And then the price gapped down on them. So there are traders who are stuck right here in this area, and they see the stock trending back up, and they're ready to break even on their loss. Okay, so what you have here is an oversupply of shares. So once you begin to push up into this 36 cent range to break the gap, to fill the gap, you're probably going to get a large oversupply of shares dumped onto all of the new buyers, and it's going to cause a pullback because all of these people over here want to break even. So when it causes the pullback, you want to find that 31 cents as support. Again, old resistance become new support. Once you test that 30 to 31 cents as support and it holds, then you will get a breakout, and I feel like you will begin heading into that 45-cent range, and this stock wants to begin working its way back up into the 62-64 cent range, and then I believe that's where it will top out at. And once it tops out at that 62 to 64 cent range, then we will have to wait a couple of days to see what goes from there. But again, 62 to 64 cents makes sense as far as topping out, because once again you have to look at those who accumulated back in this area at the 23-cent range. Again, 100% for them correlates to that 45 to 46 range. So you'll get a pullback here, like we said, retest the 31, and then probably a push back up, because all of those who bought in that 30 cents range will then go up to test that 60 to 62 cent range. And again, that will cause profit taking, because that'll be another 100%. And then the whole trend will probably fade out altogether and probably retest that 36 cents. And then from there, I have no clue where it will go. All right, but right now we want to break above 30, fill the gap at 36, retest 30 as support, and then work our way up to that 45-62 cent range. All right, moving on. Ticker ATOS. I caught this one on the 22nd of January, back in this area. So looking at ticker ATOS, let's zoom in on a 3-month time scale. So ticker ATOS. All right, so what you see here, each time consolidation, consolidation, breakout, consolidation, consolidation. These are bullish flags, continuation patterns. That's the flag pole right here, flag pole right here, flag. Are you guys seeing it? Flag pole right here. Again, consolidation, very slight consolidation, breakout. All right, now one thing to note is we broke above a very, very bullish moving average, which is the 200 pair moving average. A lot of swing traders pay attention to this moving average. So a couple things to pay attention to. All right, let's zoom out. So now we can identify past areas of trend. I said trend, past areas of resistance, excuse me. So past areas of resistance. We've already worked our way into our price targets that I listed a while ago. All right, we've already broken to that 49 cent. We've already broke through 58, and we've already broke through 66 cents. All right, and then after we broke through the 200 period moving average, we closed above it. So now we're gonna work our way into this 93 cent range, and then you will probably have a nice retracement. This will probably be tomorrow. You'll push your way into that 93 cent range on very high volume, which you might want to keep a tight stop loss going into tomorrow. Once you push into that 93 cent range, there will be a lot of profit taken, and then guess what area you are going to retest? The most important area to swing traders, the 200 period moving average. So you're probably going to pull all the way back to this 68, maybe even 60 cents, because there's a gap right here. Okay, so you may come back, try to find that 68 cents as support, may even come back down to the 60 cents, fill in that gap, and then break out and start trying to work your way back up into this area of $1.59. But baby steps, you want to take baby steps. Remember, each time this is gapped up, it's consolidated. Not gapped up, but every time it's spiked, it's consolidated. Spike, consolidation, spike, consolidation, spike, a 1 day of consolidation, and then you have a gap up with another spike. So this run is probably going to get exhausted here pretty soon. So as you push up into this 93 cents, which I'm pretty sure you all would do tomorrow, I would probably start looking to take profit and or put a tight stop loss, so when it begins to pull back, you lock in your profit. Wait for it to either retest this 68 cents and or fill this gap at 60, and then look to re-enter to come back up and retest this $1.59 area. But this move is beginning to get exhausted for those who entered down here in this area of 32, and those who entered down here in this area of that 45 to 60. Once that first wave of selling begins tomorrow, going into 93 cents, it's going to cause a lot of other people to begin selling, and it's going to cause a major pullback. So keep a tight stop loss going into tomorrow. Once you hit that 93 cent area, and then begins to start looking for that pullback again to that 68 and even this 60 cent range to fill the gap before the trend continues up. All right, that's all I have, y'all. TTM. Oh, nope. We got to talk about ticker CHFS. That is the one I am in right now. All right, I know the price action as of lately has been a little shaky. Nothing to worry about. All right, so if we look at ticker CHFS, it is in a ascending triangle pattern, and the trend is still holding. As you can see, this area of 445 is the current resistance. As you can see, failed, had a breakthrough but failed to close above it. So strong area of resistance, but we're making higher lows. Low of 287, low of 346, low of 362, now low of 371. So we're still holding this trend line, but as you can see, the channel is becoming tighter and tighter and tighter. So as you can see here, low, high, higher low, higher high, higher low. So tomorrow we should have a higher high, probably in that $5 to $5.50 range, hopefully. And if not, then we should somewhat push back into this area of resistance of 445 tomorrow minimum. Past 2 days of selling have been on low volume, so nothing to worry about. But this consolidation pattern has been for quite some time now, going on 2 months. So when we have the breakout again, we have this gap we got to fill right around this $8 area, and then we'll start working our way up back into these areas up here. Okay, let's do a quick Fibonacci retracement so we can see what price targets we are looking at. Again, so the $8 gap to fill, and then we're looking again into this 1115, 1370, and 1626 area. And also keep in mind, this is a low float stock. I believe there's only 510,000 shares available to the public to trade. I may be wrong on that. I may have to go back and look at that, but that is a very low float. So once this breaks out of the channel, it's going to bring a lot of attention to himself, and then when people start trying to pile in on this stock, it is going to move fast. Just as you can see here, in one day this thing went from the 360s all the way up to $24, and that's because it's a low float stock, which means there aren't a lot of shares available to trade. So those who have been buying in this area, they're holding on to their shares. So when this breaks out, it's going to move pretty fast, because everybody who's down here will hold their shares, which will force everyone else who's trying to jump into the stock last minute to buy at higher prices, and it will move very fast. So CHFS, the trend is still very strong. Once we break out above that 445 on high volume and close above it, this will draw a lot of attention to itself, and will spike up very fast. All right, TTM Trades, I'm out. I gotta get some sleep. Till next time, subscribe to the YouTube channel, and I will see you later. Trade safe, and always enter every trade with your own trading plan, and make sure you execute that plan.
Houston, Tranquility Base here. The Eagle has landed.